According to the Mastercard Economic Institute, spending during the 2024 holiday season will be up 3.2% year over year. Joining us right now with more on holiday spending inside Mastercard Senior Advisor Steve Sadove. He's the former chairman and CEO of Saks Incorporated. Good morning to you. So it seems like we're going to have a good Christmas, it seems like. But then we look at some of these other, we look at a Target or some of these other places, and you're sort of thinking, I don't know how good is it going to be. So what do you think?
I think it's going to be a very healthy holiday season. The Mastercard Spending Pulse Insight says 3.2%. That indicates that the consumer's still shopping. If you look at the data over the last several months, it's been in that same kind of range of little over 3% in terms of overall retail spending. And inflation is under control. So you're seeing real growth in the consumer spending. But they're being very choiceful. That's one of the words that some of the CEOs have been using as they've been reporting. Everybody's not winning. There are winners, there's losers. But overall, the consumer's healthy. They have money in their pockets, and they're employed. They're seeing real wage growth, and they're outspending. But I think that it's very different. It's a shorter holiday season. It's a more promotional holiday season. It started earlier. And you can expect to see that you're going to have a mad rush towards the end. But I think you're right, Andrew. I think you have winners and you have losers in this environment. And it's probably been more exacerbated this year than I've seen in the past.
OK, so let's talk about the winners and losers, though, in your mind. Who do you put on the winner list? Who do you put on the loser list?
Well, I'd start with, rather than talk about individual companies, I talk about themes. The consumer is wanting value. They're wanting convenience. They want product anywhere, anytime they want to get it. So online is winning. Pre-pandemic, online was growing at about twice the growth rate of stores. The forecast for the holiday season's online at 7%. Stores are going to probably grow in the 2% type of range. So online is a winner. I think that the stores that are providing, when we talk about value, the big box stores that are membership are winning. You see the off-price players are winning. I think that the providing food in a convenient form, I won't talk individual names, but the membership as well as a high preponderance of food are winning. I think that what you have is fashion trend right in the apparel space are winning. So you see a lot of winners and losers in apparel, but overall apparel is actually up to, flat to up a couple of percent. So again, it's not a one size fits all, but there are individual stories that are cutting across all of the business. And you really have to focus on who is playing the right way.
Steve, you mentioned the idea that this is going to be a promotional period and that we may see more promotions this season than we have in the past, or at least for a while. What does that mean to margin?
Well, I think that's a big question mark. Right now, you have a 5-day shorter holiday season. You saw some of the sales come in from some of the companies relatively weak. You heard some comments from some companies that the first 2 weeks of November have started off okay. But if it's a question of who's going to blink, because of the shorter season, if in fact companies feel that their inventories aren't under control, in the next couple of weeks, you could see some movement in pricing, and that's where you have the risk of margins. Most of the expectations for the fourth quarter are relatively conservative in the forecasting, largely because they're not sure of how the margin's going to play out. I think it's pretty clear that you're going to hit the top line. The retail sales number is a question of whether they have to promote a little bit more to get there. I think in the end, it's going to come in pretty healthy in terms of the margin side of it. But again, those retailers that aren't providing the convenience value, the fully integrated, seamless shopping experience with digital are probably going to have a little bit of risk towards the end of the season on margin.
Hey, Steve, we've been watching, trying to figure out if there has been a consumer confidence jump that shows up in sales the same way that you've seen investor confidence bump the stock market since the election. There have been several companies that have reported that their November numbers were showing better trend-wise. What do you think from what you've seen, from what you've heard? Is there something you can kind of suss out in those numbers yet?
Again, this is anecdotal rather than the hard data, but everything I've been hearing is that there is a bit of a post-election jump in confidence. The consumer, historically in election periods, they freeze a little bit during the pre-election date. You've seen people get back out. I've seen a couple of studies that have come out in the last week or two that have talked about increased consumer confidence in their own personal situation and getting out there shopping. So that's why I would anticipate that you're going to be very comfortable in the 3% type of growth for the holiday season. Remember, with a 0.7 or so inflation rate on holiday goods, that means you're at about a 2.5% real growth in the retail spending, which is healthy. And I do think that the consumer confidence is increasing. You've got a very healthy stock market. The luxury consumer is feeling very good about their own personal situation. So they're out trying to get a reservation in a high-end restaurant. You're still seeing a very strong performance and confidence level on that consumer. And at the lower end of the market, while they're very stretched in terms of because of the high prices, even though inflation's down, the price levels are high. You're seeing the real wage growth among that consumer as well.